Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on XLK, Apple, and Facebook. So cautious of the tech sector weakness. There's no tech sector weakness, so there's not much to be cautious of. Just certainly walking up stop losses, but the bulls are in full control with blue sky breakout. Apple keeps running. The tech sector is propping the market up as the financial sector sells off. So it's Apple, Amazon, and Google were the lead bulls today, with Apple and Amazon in blue skies. Google is heading to blue skies. So XLK, close up at the highs. Higher lows on the daily continue. 63.40 was a key support. We bounced off 63.48 today. Bull volume spike. And resistance from here is 64.50 and 65, some psychological levels. This weekly chart is insanity, 7 weeks in a row, closing at the high, no sign of slowdown. Again, my message is the same. We need to be cautious on this move because we are overextended, but until we see signs of weakness, until we lose hourly 20-period moving average supports, until we lose the higher low, higher high hourly stair-step pattern, there is no red flags. Apple on the daily, there's that follow-through. Higher lows 4 days in a row. Bull break and a close at the all-time high is extremely strong. Weekly time frame in breakout mode. Resistance is psychological 176.50 and 177. No slowdown in sight. Losing the daily higher low pattern would be red flag number 1, and there is no red flag at this point. Facebook on the daily time frame. So it's not anywhere near as strong as these other names. There are a couple names, Facebook and Netflix, that stand out for their weakness today comparative to Google, Apple, and Amazon, which were raging bulls running the market. So we're tight here with an inside bar. We've got support of 179.11 and resistance of 180.35, and we'll see which direction we break these inside bars. And resistance will be 180.75 and then the all-time high if it's a bull break. If it's a bear break, we're looking down at 176.71, a must-hold level. Curious to see if we're going to see some money flow into Facebook here from those other names. But again, both Netflix and Facebook clearly standing out as weaker names comparatively. We had profit taking from earnings. We are still holding up fine, not confirming the bearish reversal weekly candlestick from last week. But unless we see a break of 180.75, we're not going to see much bullish action on Facebook. So that is the hurdle that the bulls need to get over. And the initial early signal will be the break of the daily inside bar, 180.35. So if we do see tech sector weakness, Facebook and Netflix will be names that we look to for weakness first because they're not seeing the strength that the other names are seeing. But again, there is no tech sector weakness, and we're going to have to see Apple, the leader, in my opinion, lead the way on consolidation in order to see it happen in all these other names. So that's what we're going to be keeping an eye out for still. But again, as long as we keep holding the hourly 20 period, Apple this morning bounced off its hourly 20 period support multiple times. It looked weak this morning first thing, but it held that support and then rocketed to new all-time highs. And that was something to be keeping an eye on, hourly 20 period moving average. Appreciate you watching. We'll see you tomorrow.